Hello everyone, welcome back to CryptoCache. Thank you very much for joining me here. I hope you and your family are having an amazing day here. Happy Wednesday. We're going to take another look at Bitcoin, of course, as per usual. What else do we do, right? Not a lot of altcoins are flourishing right now, so not a tremendous amount of coverage out there, but Bitcoin, obviously a pretty consistent up and down. We'll go ahead and look at that, of course, and much more. If you're new to the channel, I'm not a financial advisor. I just love teaching people how to trade, and I hope you can really learn something here today. And I'm just passionate about teaching people to trade and just trading in general. I've been trading for 15 years. So if you do want to become a better trader, CryptoCache.tech is a site. Link in the description below. We've been having some very awesome results with some of our short positions up until this weekend. And of course, some longs this weekend. Really cool, overall, awesome situation. So I'm very happy about it just based on the simple fact that a lot of folks are having a very good time, and it's a really good experience. So be sure to check that out. CryptoCache.tech is a site, link in the description below if you want to become a better trader. Now, taking a look here at the monthly, here's something we got to acknowledge, of course. We've talked about this many times before, but this monthly candle is not starting fantastic. It's what we're about 8 hours in, right? So it's less relevant at this point, but just keep in mind the close for the last month's one month candle is tremendously lower than any other previous 1 month candle close. Okay, so the lowest candle close we've had previously was 34,750. So essentially 35,000 is the cutoff there. And since we closed at about, just say 32 is a round number, we are lower in that sense, and that's essentially creating lower lows on the monthly. Okay, so even though we still have higher highs printed, we're having lower lows essentially. And you could actually argue too that these are lower highs as well. So generally speaking, the monthly is telling us we have this transitionary situation, which is transitioned quite a while ago, but in general, we have confirmation now that the monthly has closed, that we're still trending lower. Okay, so we're making lower lows now officially on the monthly, and that's not really a great sign. Okay, not to say it's going to last forever, but it is certainly not ideal for the current climate that we're in right now. Okay, so again, even though Bitcoin seems to be doing fairly well in the overall sense the last 72 hours, that means nothing compared to the big picture here and what we see here. This is what I want you to take away if you're going to take anything away. We had a monthly candlestick close below the previous monthly candlestick close, essentially establishing lower lows. Okay, so again, that's generally what we're looking at there. And of course, we're underneath the 20 and above the 50. Pretty standard stuff there. Previously, we spent about 6 months underneath the 20, and we're about 2 months in, or 1.5 months in. So, take that with a grain of salt. There's no guarantees that the previous past will, come to fruition, but for lack of better terms, if we do come down and retest, just say the 20,000 range, that would be a retest of the previous high. And it's a very standard thing for the previous high to essentially establish itself as the new low. Okay, so our support level is really close to about 21,000 as a close approximate here based on the 50-day SMA on the monthly. We can also see too that we are underneath 50 on the RSI. Same thing happened as well if we go ways back here, roughly 3.5 years back to 2019, right here. This is a case in point that's exactly the same as what we're seeing right now. So it does imply that we might have more downside to retest 21,000, come back up 3 or 4 months later. Okay. Again, so the next 2 or 3 months, I'm anticipating we're going to see a lower price point than we're at presently. So just be mindful of that and be aware. That's a pretty strong likelihood. Good news is we did bounce somewhat off of 30 on the RSI on the weekly. That's kind of just consolation based on the fact that we had 9 straight weekly candles close. So, what goes down must come up at least for a little while, right? I mean, we saw the same thing here as well. Came up and kind of gave us a couple of dead cats and then eventually flopped on its face. So we could very well see something similar, bounce off of 37.5, maybe even 40,000, and then down to retest our previous highs. Okay. Generally what we're looking at there. So again, being in this situation right now, presently, I would say we're not in a fantastic situation. The macro is still screaming downside. That being said, the daily is maybe a different story here. It's kind of maybe telling us a different, what's going to happen next. It's kind of wanting to say that, hey, we want to come up here. Well, we had one good solid green day, so let's not try to get ahead of ourselves and think that we're going to the moon because of that. In fact, a correction is necessary. As long as this correction isn't lower than 30,500, we should still be in good shape to see more upside. We'll look at smaller time frames to identify that so you can see what I'm talking about, but for lack of better terms, I wouldn't get super excited in the fact that we are effectively making higher highs for a change. It's well and good, but there's still some massive trend lines that we need to acknowledge that we are still not above, and we're going to probably take at least, I would say, a week or two to get back up above that. Again, it could go like this, it could literally go like that, it could even go like this, okay? We got to be prepared for a worst case scenario, but if the overall trend is moving down, why take a long position now, right? You could get lucky, yes, and there is a chance we could very well see these resistance levels of 33,000, 35,000, and 37,500 retested. There's a great chance of that. But just know, between now and then, you want to be cautious and careful with what you do. So what we're going to do is we're going to look at the Ichimoku cloud on the 1 hour. We're also going to look at maybe the 15-minute volume weight average price and kind of see where we're at specifically, as more of a smaller time frame, to identify how that's going to transition to the larger time frames, right? Because the smaller movements are definitely relevant, but I just like to drive home the fact that we have a big picture here, and it's yelling at us right now saying we do not want to go much higher, okay? And what I mean by that here is, let's go ahead and take a look at that. On the daily, we can kind of see right here on the RSI, even though, yes, it peaked up above, we're still down below, essentially. So in essence, we're getting rejected by 50 on the RSI on the daily. Very standard stuff. We've been underneath 50 on the RSI since April 6th, essentially, once this downtrend continued to confirm itself. So being under 50 on the RSI, to me, is a stark reality of the fact that we are probably not going to, we may be able to break above, don't get me wrong, but the likelihood of it continuing down from here, or at least, seeing a red day today, which has already started, is very strong reality, okay? I almost opened a short last night, but we didn't have confirmation. We almost have confirmation now, and we'll look at that together. But generally speaking, a rejection off 50 on the RSI, never a great sign, okay? Just keep that in mind. And now if we can get back up above 50 on the RSI, you can see what happens. Things start to take off. So we got a good, not just 1 day, but just say 2 or 3 days of confirmation above 50 on the RSI, then we might have a leg to stand on, okay? Because even though we do have, yes, the 20-day set moving average working its way underneath the price action to potentially work as a support, that's still not enough. We want to be up over the 50. Honestly, that's probably the best one to be above. And coincidentally, the 50-day SMA works concurrent with most trend lines, at least descending and ascending trend lines. So I would trust the 50 over the 20 any day. So we're not there yet. Therefore, I am not trusting Bitcoin, all right? At least to the long side. I would say that you have much better luck if you were to consider it that, to the downside, taking short positions. Just be mindful of what you use. Cross leverage might be more appropriate, more safer than isolated leverage. That being said, looking here at the 4 hour, let's go ahead and move on and kind of see. We can see that we are getting rejected by the 200-day SMA on the 4 hour. Excuse me. That is essentially a disadvantageous sign, right? So when the price comes up to kind of get rejected because it had this overextension, it goes sideways right at a certain price point, and then of course it's starting to come back down to try to retest the 20. Ultimately, this is not something I like to see. Okay, so being under the 200 on the 4 hour is not ideal. Granted, I prefer to use the moving averages in larger time frames. Smaller time frames, you might want to use exponential moving averages, and those are things that I use on the 1 hour or less. But granted, that being said, though, the 200 on the 4 hour to me is a pretty big sign. Another thing I also mentioned too as well is this RSI over 70 on the 4 hour. Never, ever a good sign. I think you could look at like 9 out of 10 examples of like the price being above 70 on the RSI on the 4 hour and it coming back down after that. So are we surprised to see this right now? Definitely not. It's absolutely par for the course. Another thing too, we can see this MACD divergence, of course, which is also a stark reality. Again, not the main reason to take a trade, but when you see this transition where the 26 intersects with the 12 in a downward fashion, then we can actually kind of almost, I wouldn't say guarantee, but for the most part, once that crosses over like it is so far, we can expect further downside. Okay. Again, it doesn't always happen. You can see some of these times where it kind of gets stopped out, but with this much momentum to the upside, the more momentum you have on the MACD, the more likely it is to reverse and effectively do the same thing. Okay, so just keep that in mind. We've got so much bullish momentum in the last 72 to 90, I don't know, however many hours, right? 100 plus hours. And we're in a situation right now where the price wants to come back down and the profits are going to be taken from the whales. Okay, it's just the simple nature of how it works. Now, how much lower can it go? Well, we want to talk about that because on the 1 hour, I kind of identified this yesterday. As long as we do not come down below 30,500, which is essentially this range here, then we should be in good shape. Okay, so just say the price kind of hangs out where it's at, it will likely continue back upwards from there. Again, no guarantees. We want to look at the cloud and kind of see, but generally speaking, previous high, a most recent high, should essentially work itself as the current low. So if the price comes down to test that and bounce off, we're good. If the price comes down and breaks below this level, then that would be disadvantageous, confirming the fact that we are no longer establishing higher lows. Those are things we need to take into consideration. So again, that's kind of just where we're at here. Let's look at the cloud and kind of see we're traveling within the cloud now. So technically speaking, you do not want to take a position. You want to wait for the price action to either break below the lower lead here, and that's a case in point where we want to take a position, or when the price breaks back above the cloud and you have the lagging span free and clear of price action, which it looks like it's right about here, and of course conversion line above the baseline. So we have basically 3 out of 3 reasons not to take a trade right now. So I would recommend staying patient and positive and waiting on the sidelines for this to kind of happen. I know it's a difficult thing for most people, but the best traders are those who are not jumping right into trades. Okay, so again, practice what I preach in that sense if possible, please. I recognize it's not easy, but in that sense, I just really hope that you can be cautious because there's really no sign here. Obviously, it does look like it wants to go down, and a short seems logical, but I would personally wait for confirmation because there's a great chance. I mean, I've seen prices come down and bounce off the cloud, and you know, when you're within the cloud, the general idea is to not take a position. Okay. But the confirmation we have right now, I mean, I'm sure it's pretty obvious with this candle, but even if this candle wasn't closed, or trending down like it is, before it closes here in 10 minutes, the lagging span is intersected with the price action. It did that roughly about, 18 hours ago, somewhere in that range, because I was mentioning that it wasn't there yet yesterday, but if it does, you might want to consider taking your profits. That's essentially the great thing about the cloud. It really helps us understand and identify good, safe entries and safe exit. The safe exit was to close your position last night. I know it's easier to say right now, hindsight's 20/20, but that's generally what is supposed to happen. So in other words, that's kind of where you're at there in that sense. So a long position should be closed, not to say you just want to open a short position here because we haven't broken down below 30,500. If we get a strong close below 30,500, just say today, then that would probably be a pretty good sign that the price is going to continue lower. Okay. Again, we're not there yet. All well and good. Taking a look, one last thing here, let's go ahead and just jump on over to the 15. It's going to be pretty obvious, but we're well underneath the volume weighted average price. In fact, we're outside these standard deviation lines here too. So that's actually disadvantageous in a lot of ways. In other words, the price could and likely should pull back up. But what this is also telling us too is that we have such low volume that we have a lot of selling pressure here. In other words, the bulls are not buying at all. You can just totally tell that they're kind of taking a back seat because anytime you go outside of standard deviation lines, there's usually a contraction and the price comes back to normal. We're not seeing that. Therefore, we have low amount of volume because these bars are kind of too close together. And with that low amount of volume, gives us the indication that we're obviously not seeing any buying pressure. The price is just going straight down. That being said, the bears are in complete control right now. So it really just tells us that we're likely to see more downside than up. But once again, this can absolutely change at a moment's notice. But generally speaking, being below the volume weighted average price outside those standard deviation lines really just tells me that we have low volume. While we do have more volume here, it's low buying volume. In other words, there's probably like 90% of the volume that we're seeing right now is just selling. Okay, and what do you know? They're going to take their profits. Whales are taking their profits because the price has been overextended for too long. We're below specific moving averages. We have a key level resistance just above the price action. A lot of reasons not to get super excited about the price going up here moving forward. Not saying that it won't, but it's more likely to go, at least in the immediate future, to go down today. We'll probably close a red day today, and tomorrow would be a different story. So obviously it's a different story every day, even every hour, but what I'm getting at here is staying above this level here, not closing below 30,500 as a round number, would essentially put us in a decent position still for Bitcoin. We could very well still see the price continue higher from here. We're not in dire straits just because we've had a bad hour, but note that this is not great, not a great sign to see this here. Again, too early to tell. Last time it did this as well, it just came right back up, but it's still getting rejected at key level resistances. So I think we still got a lot of selling pressure right now. We just got to acknowledge the fact that the price is more likely to go down than up today. So it makes sense we're seeing a red day here, of course. That's very standard correction, especially after we saw 3 white soldiers and a doji candle yesterday. Those are just pretty stark realities here letting us know that, hey, a reversal is imminent. Okay. That being said, I hope you found benefit here. That's really all I have for the day. We'll go ahead and obviously review this again tomorrow and kind of see, but I would just be cautious and careful today. And I know logic tells you to take a position now because it could potentially be at its lowest point and it might bounce back. While that's true, that's not what good traders do. So I just recommend being careful. If you're going to take a position, dollar cost average, sure, there's nothing wrong with that. 31,700 is still a good value for Bitcoin, or 31.1. So in other words, that's kind of where we're at there in that sense. So just please help understand that we're in good shape here right now. Okay, but we're not in dire straits either. I know it seems kind of contradictory, but we're at this little transition right now where as long as we close above 30,500, I personally feel like we're still in okay shape. Once again, we'll bridge this gap here tomorrow. I hope that it made sense and you learned something here. If you want to become a better trader, CryptoCache.tech is the website, link in the description below. And I do look forward to working with you. Have yourself a fantastic rest of your day. We'll see you in the next one. Take care.